This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago with your livestock roundup. We saw a whoosh lower here this morning on fears of outside market volatility. Kind of seeped into the livestock trade. We saw live cattle work lower, but came back off those lows really good, testing up against yesterday's high print, and the gap 122.55 is the line in the sand that the bears want to defend. If the bulls achieve a closeout above here, I wouldn't be surprised to see us make a run at that October high of 123.90. But with that said, the top end of the range right there is a favorable spot to look to the short side, whether you're a speculative trader or a hedger. From the risk-reward perspective, that's what you need to defend. If we continue to work lower, 121.30 to 121.50 is previous resistance that now becomes support. Break down below here, I think, encourages some long liquidation, but obviously a lot pending on what we hear from cash here yet this week, which is coming in relatively steady, about 118, but also keeping an eye on the outside markets and what happens there as we wrap up the week. Moving over to the feeder cattle side of things, not a whole lot of confidence here. 145.50 is a 50% retracement from the April lows to the October highs. This has been kind of a brick wall as of late. If we can chew through here, potentially 146.60 area, which is a 200-day moving average, but ultimately on a longer-term basis, the bears remain in total control as we continue to make lower highs and lower lows. Key technical support comes in at about 142.80 to 143. A break and close below here accelerates the selling to the downside, and I would not count the 130s out of the picture here over the coming months. Now, wrapping things up with the lean hog market, lean hogs have been choppy. We've been talking about that in the livestock roundup, but I still like this market to the buy side. I think you're able to buy dips and sell rips. We're making a little bit of a bull flag, making higher lows and lower highs. If we can get a good fundamental catalyst to give us that technical breakout, I think we take out recent highs of 69.50 and start moving well above 70. So that's what we're looking at. That's what you should be looking at too. It's been Oliver Slope with Blue Line Futures from the floor of the CME.